Good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great weekend. I'm going to give you guys a quick update on everything that happened last week and some things that may happen this week that may push rates into a really different direction. So, before I get into it, do a quick dad joke. Dad joke today is, what do you call people who are afraid of Santa Claus? People who are afraid of Santa Claus. Claus stroke phobic. Get it? All right, so getting right into it. Last week, there wasn't a whole bunch of news except for the ADP employment news. Now, the ADP employment news was what we kind of saw last month in place of the unemployment rate and some of the jobs reports that we didn't get because of the government shutdown. Now, the ADP really gives us an idea of what the private sector looks like. Now, to give you an idea, the ADP deployment for November showed that it lost about 32,000 jobs. Small businesses cut about 120,000 jobs. So if that doesn't give you guys a sign of like how the labor market is doing, that's a pretty good indicator of what we're expecting to see on the December 16th unemployment rate report. Now, again, the December 16th unemployment rate report is the report we were supposed to get in November, I think 1st or 3rd or something like that, to tell us what happened in October. So you're going to get that on December 16th. And to keep in mind, October had all of the government shutdowns, the furloughs, the layoffs, all of that. So what we're expecting to see because of all those things that happened, especially with what ADP just showed for November as well, and as well as the ADP implement that showed for October, we may be seeing that the unemployment rate may go up. And it doesn't take much because we're at 4.4 right now with the unemployment rate. And really, it's about 4.44. So we just need a small push to get up to 4.5 in regards to the unemployment rate. With that in mind, if those things show the unemployment rate is going up and we see a bunch of other weaknesses in the job market, that's when we'll see mortgage rates improve typically. So that's what we're kind of expecting to see is around December 16th. If the unemployment rate is going up and we're seeing more weaker employment data, then that might be a good day for me to lock just so that I could make sure clients are getting the best rate or the lowest rate in this cycle. Now, moving forward, one of the things that kind of still points us in a direction that the job market's still weak is that our continuing claims, the people who continue to file for unemployment claims, is still set at over 1.9 million people. It gone down a little bit, but that could be due to seasonal changes. With the holidays, with Thanksgiving, a lot of people may delay filing for the unemployment claims until after. And there's a chance that they may wait until after the Christmas holiday to file for unemployment claims. So it just depends on the situation. So there's a chance that we might see a huge influx after Christmas of all these unemployment claims. That could be a really big thing that could happen. The other thing that's going to happen this week is going to be really big is once we get the JOLTS report tomorrow, which is job openings data, like how many job openings have happened. And this is for the month of September and October because we didn't get this in October or November because of the government shutdown. So we're going to see how the job openings trended between September and October. And that also gives us an idea of how the labor market is doing. So that's going to be a big thing that's going to be going to have a big impact on mortgage rates this week. Another thing is that the Fed starts their 2-day meeting tomorrow in regards to how they are going to do or how they're going to handle the Fed funds rate. If you guys remember, in the beginning of November, they were thinking of like a 30% chance of them lowering the Fed funds rate. Now, about a week, 2 weeks later, near the end of November, now they changed their mindset to being about 70%. So we might be seeing on Wednesday them releasing a Fed minute stating that they're going to be lowering the Fed funds rate, depending on the data that they see. So that's kind of the mention of what's going on. They saw a really big push in the unemployment rate data for September that got released in November. They got a lot of other information as far as labor market ADP employment reports, but continuing claims, initial claims for unemployment benefits. Once they see all that information, there's a very strong chance that now that they've seen all that information, there's a very strong chance they're going to potentially cut rates by probably at least 0.25%, 0.25%, which isn't a bad idea because we are on a trend of things coming down, inflation is coming down, labor market is getting weaker. So them lowering the Fed funds rate is not a bad idea. So we'll see how that happens and what they release and what they say on Wednesday afternoon. Um, but otherwise, December 16th still marks as the most probably the pivotal day in this month is that because again, it's going to show us what happened in October, and then we don't have the right now. I need to look at the date as to when the December report is going to be coming out for November, but we will be getting the October report that was supposed to be released in November on December 16th, and that's going to be a big day, and that is literally 8 days from now. So otherwise, hopefully that makes sense. Hopefully you guys got a great week ahead of you guys. That's all I got. Nuke out.